Turn your mic on.
Okay.
You're good.
Hi, my name is Emily. I'm an advisor here at PrimeAg. Here again this week to just start looking at some quick updates on some positions to consider, especially with market volatility. Today we're going to be going over some bean recommendations. I think the big takeaway is with the increased volatility, we've got some really awesome margins here. As of today, when beans are near 14 bucks, we can lock up about $225 over the 5-year average. And that's just off of the historical averages here and just trendline yields for 2021. I think the biggest thing right now is just to start looking at establishing a trading range. I mean, biggest thing too is once you're done with cash sales, either start looking at budgeting dollars to buy some puts or tuck some fences in place in your hedge account. Gives you a trading range. Some of the elevators also offer them. They're called min-max contracts there. We like that position. If you put them on in your hedge account, those are marginable, but it does give you a floor price. Gets you at about 60% covered to 80% covered between cash sales and then the option positions. Taking a look at the put today, we like the 1340 for about 60 cents. The floor price, the minimum that you're guaranteed is $635 an acre. The 5-year average is sitting at about 485. So you're locking in margins about 150 bucks above the last 5 years. Your upside on that position then is unlimited because you're just establishing a floor. Taking a look at the fence strategy, we got a maximum there with that sold call. The position that we like is buying a 1360 NOV bean put and selling a $16 NOV call. And the net cost on that is about 30 cents. Gives you that trading range again. The top side is limited by that $16 sold call. And again, when you start putting it in perspective with the last 5 years, your dollars per acre, your max is sitting at 312 bucks over the 5-year average. And on your floor price, you're $190 above the last 5 years. If you're using the fence position, we always try to be very transparent with positions that we put on here. Full disclosure, that is marginable. So as we look through the budget, a dollar move is $5,000 per contract. Our budget for this year on that bean fence with the $16 sold call is $5, about $25,000 per contract. And it covers a market move with the highs up near 18 bucks. Little over covered on the market move there, but the volatility I'd rather be a little bit over than under on our budget, and the risk again is unlimited. I guess final thoughts to wrap this thing up. I mean, have a plan. No plan is a plan. Stay focused on holding your dollars together, and how are you going to attack the market? Are you going to sell some cash, buy some puts, put some fences in place? I mean, just a reminder that 2012 always sticks out, but highs were put in that year as well. And then finally, how are you going to pay for it? Are you going to cash flow it yourself, or are you going to use a hedging line of credit? And where there's a problem, there's always a solution. If you need some help going through some things and look at some options, feel free to give us a call here. And finally, have some fun. Really profitable levels in here right now. Enjoy it. And as always, if you've got, take a look at subscribing to our YouTube channel for some more marketing ideas.